Today in crypto. The Bitcoin price plunged by over 16% on Monday, intraday low of $27,678 where buyers kicked in and the BTC price bounced to recover above the $30,000 level. Here's 2 reasons we expect Bitcoin to reclaim $34,000 by the end of the week. The quick recovery to around $32,800 is a major reminder of why the ongoing Bitcoin price rally is completely different from the one that led to a complete price implosion of December 2017. Bitcoin has been on an explosive surge from $3,858 in March to $34,810 in January 2021. Following the whale crypto sell-off yesterday, a fresh wave of buyer immediately absorbed the selling pressure, which is a good indication that BTC is set to continue climbing in 2021. While selling pressure from BTC whales appears to have caused a short-term price crash, there are still 3 reasons why Bitcoin should continue to test new all-time highs after this period of consolidation. Institutional money for Bitcoin. The institutional adoption narrative of Bitcoin has been a prevailing one, particularly towards the latter half of 2020 as firms like MicroStrategy led the charge to make Bitcoin as reserve hedge asset, eventually purchasing over $1 billion in Bitcoin for its treasury. Institutions have been flocking to Bitcoin, and in the last 24 hours alone 2 more mainstream financial firms have confirmed their exposure to the BTC market. Singapore-based investment fund 3 Arrows Capital has reported a significantly increased position in Grayscale Investments' Grayscale Bitcoin Trust, GBTC, and now holds 38,888,888 shares. At the time of writing, that position is valued at just over $1.3 billion. Meanwhile, New York-based investment firm Skybridge Capital, a leading global alternative investment firm, has also just announced the launch of the Skybridge Bitcoin Fund LP, which provides mass affluent investors with an institutional-grade vehicle to gain exposure to Bitcoin. Additionally, on behalf of its flagship funds, Skybridge initiated a position, valued at approximately $310 million at the time of this release, in funds investing in Bitcoin during November and December 2020. Fidelity will serve as custodian, and Ernst & Young will audit the fund. In the press release announcement on Jan 4, Skybridge founder and managing partner Anthony Scaramucci said, "We believe Bitcoin is in its early innings as an exciting new asset class. With the institutional quality custody solutions available today, we believe the time is right to allocate capital and provide our clients access to the digital assets space." Despite growing retail demand for digital currency, Wall Street firms have largely avoided the market due to concerns around security. With the launch of the Skybridge Bitcoin Fund LP, investors will have access to institutional quality custody and operation, without forcing investors to directly hold Bitcoin. Bitcoin is leading a digital monetary revolution around the world, said Brett Messing, Skybridge president and chief operating officer. Messing added, "We believe the onus has shifted from why are you investing in Bitcoin to how are you not investing in Bitcoin?" Dollar decline in 5 minutes. Bitcoin now trades inversely to the US dollar as the greenback continues to lose purchasing power on the back of excessive stimulus relief money printing. At the end of 2020, the dollar closed almost 7% lower against a basket of major foreign currencies. Meanwhile, Bitcoin climbed by more than 300%. Source: DXY on TradingView.com. The bearish outlook for the dollar, which opened in negative territory in 2021, is causing a surge in investment in alternative and emerging market currencies. Bitcoin has served as a hedge against lower bond yields and a devaluating US dollar. The cryptocurrency seems likely to continue to fulfill its anti-inflation narrative as analysts anticipate a further decline in the greenback. Bitcoin's ability to maintain its bullish narrative could depend on the Federal Reserve's forward guidance. The United States Central Bank is set to release the minutes from its December meeting on January 6th. Federal Reserve Chairman Jerome Powell has already revealed that the Fed will continue funneling cash into financial markets to avoid a deeper economic recession. The Fed measures reportedly include buying $80 billion a month in treasuries as well as purchasing $40 billion a month in agency-backed securities until the labor market reaches maximum employment. The Fed's guidance should likely spur Bitcoin bulls to reclaim a BTC price over $34,000 by the end of the week. Brian Armstrong, the chief executive officer of Coinbase cryptocurrency exchange, has commented yet again on a polarized argument about the proposed crypto regulation from the Treasury Department's Financial Crimes Enforcement Network, FinCEN, on unhosted crypto wallets, saying the FinCEN's proposed regulation is ill-advised and does not follow proper procedures. The proposed regulation generates buzz from crypto community according to an earlier report by blockchain.news. The proposed regulations seek to bring a more targeted monitoring of unhosted wallets, or self-hosted ones, while also demanding that cryptocurrency transactions conform to anti-money laundering (AML) rules. Part of the FinCEN's proposition to achieve this is by compelling cryptocurrency trading platforms to report transactions valued at $10,000 and above, while transactions of $3,000 from unhosted wallets should be verified. The verification will feature the identity of the recipient, such as the name and address of the customer, the payment amount, the time of the transaction, the value of the transaction, and any information relevant to it. This proposed regulation has generated a huge fuss within the industry, as cryptocurrency exchanges noted that they do not have the tools required to comply with the reporting directives and that the feedback time to comment on the proposed regulation is too short, especially as the proposal was released during the holidays. The heat in the cryptosphere is however higher as the deadline for feedback approaches, and the cryptocurrency industry was given 15 days to respond. In an attempt to express his dissatisfaction about the regulatory procedure, and as a follow-up on his persistent requests for an extension of the feedback deadline, Brian Armstrong noted that rather than creating the uprising in the space, the FinCEN should revisit in the new administration, engaging with industry, if it still wants to pursue something in this area. Crypto industry's requests are backed by U.S. Congress. The call on the FinCEN by industry stakeholders to extend the scheduled feedback deadline from 15 days to 60 days has gotten support from some members of the U.S. Congress led by Representative Tom Emmer. In a letter addressed to Treasury Secretary of State Steve Mnuchin, the Congress member said that the Treasury Department and FinCEN should consider extending the review period for the NPRM from 15 days to 60 days so that stakeholders have a meaningful opportunity to evaluate how the proposed rule will impact their businesses and customers. They also requested the implementation period to be shifted to 6 months post-feedback period. The cryptocurrency exchanges that are still supporting XRP and have not yet moved to delist it may be forced to do so eventually. With the accumulating amount of cryptocurrency exchanges that have announced that they will be halting XRP trading on their platforms, effective this month, XRP's price has drastically tanked, following the Securities and Exchange Commission (SEC) lawsuit against Rippe for the sale of unregistered securities through XRP. Many cryptocurrency exchanges have withdrawn the token from their platforms, at least until a consensus over whether XRP will be classified as a security will be reached. British fintech firm Revolut, along with crypto exchange Uphold, seem to be among the few that have vocalized their support for XRP for the time being. However, with the growing speed at which XRP is being delisted from exchanges, the handful of platforms that still support XRP may be forced to remove its listing as well, as the value of the token keeps dropping. Additionally, there may soon be fewer and fewer trading pairs with XRP, as approximately 20 cryptocurrency exchanges globally have removed XRP from their listings. Revolut warns against the possibility that they may eventually have to follow suit. Sharing with the Irish Times, we might also have to halt trading with very little notice if the liquidity on our partner exchanges drops and we can no longer buy or sell XRP. Revolut said that in the worst-case scenario, XRP holders will see the value of their funds drop to zero, explaining that with the growing number of exchanges delisting XRP, there may come a time when investors will no longer be able to sell their XRP holdings. For Revolut users, their XRP holdings will just drop to a value of zero, as the fintech firm does not yet have a service allowing its users to withdraw cryptocurrency funds by transferring them to an external wallet. Uphold supports XRP until the end. Uphold voiced a similar concern, but said that for the time being, XRP trading will still be available on its platform. CEO of Uphold, JP Terrio, said, Uphold will continue to list XRP until and unless the complaint is adjudicated against Rippe, specifically citing that XRP is, today, a security, or trading volume dissipates to a point where we can no longer support. Currently, many cryptocurrency platforms have delisted XRP, including leading exchanges Coinbase, Bitstamp, Binance US. Exchanges fear the wrath of the SEC, with an attorney familiar with the matter noting, "You know who is at risk if XRP is considered a security? Every exchange that lists XRP." XRP sentiment is not positive with so many exchanges delisting XRP. The liquidity of the token has dried up and its trading volume has drastically decreased, as compared to the month of November, when XRP touched $0.90 on Coinbase. At the moment, one of the leading U.S. exchanges that have not yet delisted XRP is Kraken. Things appear grim for XRP, as retail investors have increasingly liquidated their XRP holdings, have been forced to cash out their provisions or trade the token in for other cryptocurrencies. Messari founder Ryan Selkis said, "If you're still bag holding XRP, now would be a good time to sell." Currently, the token is trading at lows of $0.20 following the SEC's lawsuit against Rippe. The altcoin plummeted from levels of $0.50 to $0.20. Bitcoin, BTC, has enjoyed a roller coaster ride in recent weeks by hitting a record high of $34,800 even though it has corrected to $31,079 at press time. Leading American bank JPMorgan Chase & Company believes that this uptrend might be the tip of the iceberg in the long term if the leading cryptocurrency is able to continue to steal market share and public support from traditional safe haven asset gold. Bitcoin faces an uphill task. JPMorgan strategists noted that BTC will have to increase its current market capitalization of about $575 billion by 4.6 times to hit the theoretical price of $146,000. By doing so, it will match gold's total private sector investment in the form of bars and coins or exchange-traded funds. The strategists led by Nikolaus Panagurtsoglu acknowledged, "A crowding out of gold as an alternative currency implies big upside for Bitcoin over the long term." They, however, noted that volatilities between BTC and gold could not converge in the short term, thus the price target of $146,000 was not achievable in 2021. They stated, "A convergence in volatilities between Bitcoin and gold is unlikely to happen quickly and is in our mind a multi-year process." This implies that the above $146,000 theoretical Bitcoin price target should be considered as a long-term target, and thus an unsustainable price target for this year. A trade-off is required. JPMorgan believes that if BTC will continue cementing itself as an inflationary hedge, this could edge out gold by driving more investment flows into the leading cryptocurrency. BTC and gold are taking part in a neck-and-neck race of wooing investors as safe haven assets, with the latter taking a beating as its investment outflows hit a record $9.2 billion in November 2020. The leading American bank also sees headwinds for BTC based on indicators like a buildup of speculative long positions and a rise in crypto wallets holding small amounts of Bitcoin. Big Four accounting firm PricewaterhouseCoopers, PwC, recently acknowledged that big investors were the driving force behind Bitcoin's notable surge. JPMorgan predicts Bitcoin price could rise over $146,000 in long term. Bitcoin is increasingly competing with gold as an investment asset and has scope for substantial gains over coming years, according to JPMorgan strategists. Hit the like button and subscribe to the channel.